Bitcoin is once again at a critical crossroads, and right now the market is sending mixed signals that every crypto investor needs to understand. On one hand, we have strong long-term fundamentals. On the other hand, short-term price structure is flashing warning signs that cannot be ignored. This is exactly the kind of environment where emotions take over, mistakes happen, and money changes hands from impatient traders to disciplined investors. Let's break this down calmly and logically. Bitcoin recently pushed into a major resistance zone after a strong recovery move. This area has acted as a rejection zone multiple times in the past, and every time price rushed into it without proper consolidation, the market punished late buyers. What we are seeing now is not random volatility, it is a battle between liquidity and psychology. When price moves too fast, too many traders enter with leverage, expecting continuation. That's when the market often does the opposite. One of the biggest things to watch right now is how Bitcoin reacts after weekend price action. Because crypto trades 24/7 while traditional markets pause, price often creates inefficiencies that later get revisited. These inefficiencies act like magnets, pulling price back toward them before any sustainable trend can continue. This doesn't mean Bitcoin is dead. It means the market may need to reset. From a technical perspective, we're seeing a structure that often appears before deeper pullbacks. Momentum is slowing, upside volume is weakening, and volatility is expanding. When those three align, it usually signals that a larger move is coming. The only question is the direction and magnitude. A lot of people are asking, could Bitcoin really drop significantly from here? The honest answer is yes, it could. Markets don't move in straight lines, and even in long-term bullish environments, deep corrections are normal. Historically, Bitcoin has experienced multiple drops of 30 to 50% even during powerful macro uptrends. And here's the key point most people miss. Those drops are not failures. They are resets. A reset clears excessive leverage, shakes out weak hands, and sets the stage for the next expansion phase. That's how healthy markets function. Now zooming out, we also need to talk about cycles. Bitcoin has historically moved in multi-year waves driven by supply dynamics, liquidity conditions, and global monetary policy. While nothing in markets is guaranteed, ignoring cycles completely is just as dangerous as believing in them blindly. Right now, liquidity is the deciding factor. Central banks, interest rates, government debt, and money supply all play a role in how much capital flows into risk assets like crypto. When liquidity tightens, speculative assets struggle. When liquidity expands, Bitcoin thrives. This creates two possible scenarios. Scenario 1. Bitcoin sees a deeper pullback, potentially into levels that scare retail investors out of the market. This would feel painful, slow, and frustrating, but it would also create long-term opportunity. Scenario 2. Bitcoin consolidates sideways for an extended period, grinding down momentum without a dramatic crash. This would drain excitement, kill hype, and reward only those with patience. Either way, emotional trading is the enemy. This is why strategy matters more than predictions. Instead of asking, will Bitcoin go up or down tomorrow? The smarter question is, how do I survive and position myself no matter what happens? That means proper risk management, avoiding excessive leverage, and understanding that volatility is not something to fear. It's something to respect. If you are actively trading or planning to take advantage of market moves, having the right tools matters. That's why many traders choose platforms that offer flexibility, deep liquidity, and strong bonus structures. By the way, if you're looking for a trading platform with large bonuses, check out MEXC using the link below this video. They regularly offer strong incentives that can give traders extra margin to work with, especially useful in volatile markets. Also, Bitunix is another platform worth looking at if you want access to competitive bonuses and a smooth trading experience. Both links are in the description below. Back to the market. One of the biggest traps right now is chasing price after large moves. Markets are designed to make the majority uncomfortable. When everyone feels confident, risk is high. When everyone feels fear, opportunity increases. This is why experienced investors think in years, not days. Accumulation during uncertainty has historically outperformed chasing during euphoria. That doesn't mean buying blindly. It means scaling in, staying patient, and keeping capital available for opportunity. Altcoins deserve a quick mention here as well. Altcoins can outperform massively, but they also carry significantly higher risk. In uncertain environments, many altcoins bleed against Bitcoin before any real recovery begins. If you're involved in alts, position sizing is critical. Never assume cheap means safe. Bitcoin remains the benchmark. Everything else follows. So where does that leave us right now? It leaves us in a market that demands discipline. This is not the time for emotional decisions. This is not the time for overconfidence. This is the time to build plans, not predictions. If Bitcoin drops further, prepared investors will be ready. If Bitcoin consolidates, patient investors will survive. If Bitcoin surprises to the upside, disciplined investors won't be overexposed. And remember, markets exist to test conviction. Before we wrap up, quick reminder again. If you want to explore trading opportunities with big bonuses, check out MEXC and Bitchenix using the links below this video. Those bonuses can make a real difference when used responsibly. No matter what happens next, stay rational, stay informed, and never risk more than you can afford to lose. This market rewards those who think long-term and punishes those who chase short-term excitement.